Hey everybody, and welcome to the PlantStock channel. You're here with Mayur and me, Jesse. Today we thought we were going to talk about the latest earnings call and the latest earnings report for Oatly, their Q1. That's going to be the topic for today. Mayur, how are you doing?
Hey Jesse, good to be back.
Yeah. So basically, before we get started, as always, this is not financial advice. These are just our thoughts and opinions. As always, important to keep in mind. And don't forget, before we start this, to like and subscribe to the channel if you're interested in what we talk about and want to be notified. We do videos. We try to make them 5 days a week. And right now, it's about 3 to 5 times a week. But we'll do them as often as we can. And join our free Discord channel, guys, down in the description where you get to meet us on a daily basis. Yeah, we'll just go get to it directly. If we take a look at the financials first, I thought that would be a good idea, guys. We can see that, as you know, I'm not sure if you guys are using Seeking Alpha, but basically they were expected to get about 160 million in revenue. So they beat that about 6 million. So again, a beat once again. And if we take a look at here, last year they got about 140 million. So it's almost 20% increase there. So it's all good that far. But obviously, when we come to the gross profit here, yeah, it's probably a bit of a disappointment to a lot of people, even though they actually said in the Q4 that we could expect that to get lower. So about almost 30% in Q1 2021, now 9.5%. We're going to talk about that soon also. And if we take a look at the adjusted EBITDA, it was negative 16% a year ago, and now it's down 43%. We can see here the reasons. Obviously, it's lower gross profit, higher employee and consultant expenses as they scale for growth, public company expenses, customer distribution expenses. And then the capex is getting more now as they are expanding their capacity. So, and if we do take a look at their margins here, uh, we can see year over year Q1 2022 gross margins bridge. What I like here is that they really go into the details here. I actually haven't seen many other companies using this kind of visualization to look at it. But here you can see that one of the biggest reasons here is the short-term underutilization due to supply chain challenges. And I'm guessing that has to do with their facilities here when it comes to the utilization, right? That they aren't able to use them at maximum capacity right now. So, Mayur, what do you have to say about that?
Yeah, so that's something that we expected heading into the quarter. They had guided for that in the Q4 earnings call and the investor deck there. So the expectation was, production of somewhere between 120 to 125 million liters. They came in at 121 million liters for the quarter. So it's been a story. It's been a kind of a struggling story with regards to getting factories up and running. And partially that's due to what's going on in Asia
Yeah.
with their, Manshan factory in China. Remember, China's been under basically zero COVID lockdowns for a big chunk of Q1. So, Asia sales were actually only about $4 million
Yeah.
for the whole quarter.
Yeah.
So that was one big reason why margins are so low, is because you had an entire factory that's sitting there idle, and so you still have real costs associated with that, even if workers are not coming in to work.
Yeah.
It still costs money to run a factory, even if it's not producing anything.
Yeah.
So that's a lot of fixed cost deleveraging, is what we call it in finance, and so that weighs on margins, tremendously. And so you have all these factories, but with less production, therefore less revenues, but your expenses remain pretty much stable for the quarter. So that's the main reason why margins got hit so hard. The other reason continues to be difficulties with Ogden. So they are actually guiding for Ogden to come online by Q2 of this year, which is good news to hear finally. But it's been, Christian basically said that it's taking almost 3 to 4 quarters, let's just say 4 quarters, for a new factory to come up and running, from start to finish.
Yeah.
So it's a little slower than what we would like. Originally, we thought that would take 2 quarters, but it's taking 4. So all of this is contributing to really weak margins. It's kind of a, all happening all at once. Both
Yeah,
the China lockdowns as well as ongoing difficulties with Ogden. Remember, there's still a big global supply chain problem, and the prices of oats have actually come up quite significantly as well. So that's also another concern. They wrote that in the bridge slide that they just showed on gross margins. So this was all expected, right? So we in the video that we made the day before the earnings, I was expecting a 10% gross margin, and they came in at 9.5. So that was
yeah,
pretty close.
yeah.
Mhm.
And they
They
are,
beat me.
and they're quite positive though for the future. So we can see here on the slide, it has to do with a hybrid model of when it comes to co-packaging here. And then self-manufacturing is only about 25% right now. But at the end of the year, we can see them building that out more and more. And their long term is that they're going to be self-manufacturing about 50 to 60%, and the hybrid being around 30 to 40% there, and the co-packaging down to 10 to 20%. So they're hoping for 40% long term. So I don't know. It seems like a lot of investors right now, Mayur, they don't truly believe in this because it does seem that they're like, you know, skipping town.
Yeah, yeah. I don't think many people believe that right now, just because it's. I think the markets right now, all stocks really. It's not just Oatly. It's everything right now due to macro concerns with interest rates. Investors are basically changing how they react to what management says.
Yeah,
From a year ago, everyone was like, "Oh well, management said this, so let's price it in right now. Let's just believe everything that everybody says."
yeah,
Now it's all about, well, management is saying this, but they've been late, and we won't price it in until we actually see it in the numbers. So show us the money, and then we'll price you accordingly.
yeah.
So
Like
that's
Cuba
attitude
Gooding
now.
Jr. Show us the money. Show me the money.
Exactly,
Yeah.
exactly, yeah.
So what about the cash and debt? How's that looking at this moment?
Yeah, so they have so they're down to about $411 million in cash for the quarter. So the total, and there's only about 5.3 million in debt, and it's really just short-term liabilities that they have due.
Yeah,
So it's almost no debt
yeah,
relative to the cash that they have. So they have well north of $400 million in cash. And also, what's positive and reassuring is that they also have a revolving line of credit,
yeah.
a revolving credit facility, RCF is what they call it. And
475 million there, right?
475 million, yeah,
Mm,
exactly. And if you do the math, as far as how much cash runway they have, I think that they can. I think combined with the cash that they have currently and that revolving credit facility, if we look at their cash flow statement, they had because of their terrible gross margins, the free cash flow for the quarter was roughly 100 and let's just say 120 million, negative 120 million, if we just round up. That's basically your cash burn, right? So your cash burn is roughly your free cash flow, which is your operating cash flow minus whatever capital expenditures that you have. So if they burned about $120 million of free cash flow in the quarter, and if they have roughly almost 900 million in total liquidity between cash and their revolving credit facility, then that's roughly 9 quarters, let's say 8 quarters of cash runway that they have before they actually run out of cash.
yeah,
So that gives them about 2 full years, and that's if they continue at the burn that they are in Q1. So I think that's actually very positive in terms of overall cash liquidity, because they're guiding for improving gross margins throughout the rest of the year. And I think that they can get to, if you go back to that bridge, right, that bridge slide on the presentation,
yeah,
you know, 9.7% of that gross margin difficulty is because of short-term underutilization of factories due to supply chain challenges, right? If we can get that up and running, because remember, they're guiding for Ogden to be fully ramped by Q2. They're guiding Singapore factory to be fully ramped by Q3. And then they're guiding for the China factory to be fully up and running by the end of the year. So if all three of these happen by the end of the year, then that 9.7% you know uh, you know headwind on gross margins could reverse itself out. And if they do according to what their plan is, which is to get more self-manufacturing in the mix by the end of the year, then that 2.5% tailwind could be something like 3.5%,
Right.
right? And if some of these other things kind of fall into place, even if inflation remains very high, I think that they can get to a 20% gross margin by the end of the year. Could be even up to 25%, possibly, if everything executes according to plan by this year.
Wow.
And so remember, we're already in the middle of May, and if management is confident saying this, that by Q2 Ogden will be up, by Q3 Singapore will be up, these aren't very long distance targets. These are targets that are basically just a few months out, because Q2 is basically halfway done already,
Yeah.
and Q3 is not too far away from that. So if they're saying this now, then I think you can put a little bit more weight to those expectations. Of course, the market's not doing that right now, but I think it's possibly prudent to do that.
Yeah.
So I think they can get back to 20% gross margins on the conservative side. So that cash burn should not remain at $120 million for every quarter. That cash burn should continue to come down well below 100 million, and possibly close to 60 to 70 million by Q4. So the faster they can curb this cash burn rate, the longer their cash runway is. So if you think that some of this execution is going to fall into place, I think they have a full 10 quarters or more of cash runway before they run out of cash. And
Right.
hopefully by then, by 10 quarters from now, we'll have, all of these factories up, because remember, the target is by the end of 2023. So that's a lot less than 10 quarters, to get all 9 factories up and running fully. So
Yeah.
even if you give them an extra year, um, that's still enough time for them to run with the cash that they have right now. So I don't think that they need to do another capital raise. They probably should, though, if the stock price does recovery. If the stock price does recover, I think it's probably prudent to do that.
Mm.
But I don't actually think that they need another capital raise because of their cash burn rate right now in Q1 being $120 million on a really bad quarter.
Yeah. So
So there's that.
yeah. But some other things is also when it comes to China, right? We know that the situation with the lockdown there, but my understanding from the conference call is even though it's been pretty hard to get things produced there now, considering they're actually building a platform now there that's even bigger than before, right? And we have some products here that I hadn't seen before coming out in China, especially this that they call the new Tea Master product innovation. So they're focusing on, like, coffee is obviously not as big in China as in Europe and US. They have a long tradition of tea here, right? So they have these tea channels, I guess, tea places like tea houses, where they have a specific product for that market. And if you take a look at here sales by channel in Asia, then that the biggest one for sure is food service, and then we have some retail and some e-commerce. So my understanding is that they're really positive about the possibilities here, especially when the COVID lockdowns starts to go away again. That might take quite some time still, but again, what's your opinion on that?
Yeah, so tea is obviously a massive market in China. And remember, China, more than 80% of the Chinese are lactose intolerant. So it's pretty amazing. That statistic, when I heard it first, I was pretty surprised by it. But yeah, so dairy milk in China is not a big thing relative to the size of the population. So this is a perfect opportunity for Oatly to come in and introduce creamy tea and coffee, that the entire that the entire population can actually have.
Yeah.
So it's a huge untapped market, and they're already number one in market share when it comes to, like, for example, sales on Tmall, which is their biggest e-commerce site in China for food. It's already number one in terms of market share in oat milk category. So this is a massive opportunity for Oatly
Yeah.
overall.
And then when it comes to overall expansion, when we're talking about Europe, which was is obviously home base here, back here in Sweden, guys, I was a bit surprised that I didn't realize what a possibility you have still in Europe. I mean, here you see the blue parts that basically that's where they have their presence here. They have a little in France, Italy, and Spain, but we're talking very little. So we can see that the possibilities here to expand even more, and I talked about that on the call too. That they are making deals now already, but it's hard to get it done considering what's going on now in Ukraine. So, but when that starts to resolve, I mean, I think we have a lot of opportunity here. And then even more, we have in the US, when it comes to the Americas here. When we take a look at the Velocity brand in retail, the dairy and plant based milks. Mayur, I'll let you take this one.
So this is a fascinating slide. So this is actually telling you that Oatly is outselling every other dairy product in the U.S. right now when it comes to velocity. This metric, which is super important to know, because remember, you can show very strong growth in revenue simply by entering more stores or by just launching new products, right? So that's definitely good to see. There's nothing wrong with that. But velocity tells you, well, adjusted for how many stores you're in and how many new products you have, how much is each product growing by? So it tells you a true measure of growth per item that you sell. So how is velocity calculated? This is basically looking at for every item that Oatly makes, right? How much of that per week does every store sell? Right, so it's USD per store per item per week. So it's it's four divisions right there, right? So it's essentially telling you, for every item that Oatly sells, how much per week does every store sell?
Yeah.
Okay, so in plain English, that's what it's telling you. So Oatly does $84 per item per week per store. The largest dairy brand in the U.S. does 56, and the largest plant-based milk brand does 20. So that tells you that Oatly has significant sales velocity, which means that if this continues, then inevitably they will become the number one market share leader in this
Wow.
category
And
eventually.
and when
So
we're
it's
talking
all
about category, we're not only talking about plant based milk, are we?
no. So this is not just plant-based milk. This is
Exactly.
including dairy that they're selling $84 per store
Hmm.
versus the largest dairy milk brand sells $56 per store.
Yeah. And that's the interesting thing because considering the inflation, how high it is in the US now, obviously that impacts everything, right? I mean,
Mhm.
they talked about it that it's going to impact, I think, in the last part of the year, last half of the year, we could expect prices to going up, especially in the US also. But as they also said, that includes probably ordinary dairy products as well. And I'm sure they're already started going up. And there was some ideas and thoughts on how long can they keep subsidizing dairy products in the US then when everything is getting more and more expensive. So, and if there would be that they would start to not give as much grants and subsidize to these dairy farmers, obviously that would be beneficial for Oatly as well.
Yeah, that would be huge. But I don't see that happening just because farmers are a sort of a protected political group.
Hmm.
So neither political party ever wants to do anything that would hurt farmers because that would be kind of political suicide. Um,
Okay.
so I don't see that changing anytime soon until until it because, like, for example, it's politically popular to say, well, let's stop subsidizing coal, for example.
Mm.
So Republicans like to defend coal miners, and Democrats like to use that as their sort of edge over the other party. But with dairy, it's a lot less controversial
Yeah.
for both parties.
Yeah.
So I think dairy farmers are just going to continue to receive subsidies as long as they continue to make milk.
All right. All right. You
Yeah.
you had some notes that you wanted to talk about that you had from the overall call.
Yeah, so for Q2, the target is 135 to 145, so that's a nice little rebound from Q1. So with increased production, we will see increased gross margins. So that's definitely good to help reduce the cash burn rate for next quarter. In Q1, remember, so this is the big story really for Q1 has just been incredible difficulties with regards to dealing with the effects of COVID-19, right? With this incredible supply chain disruption that they keep seeing. This is why Ogden has taken forever to ramp up to full capacity. But now that they reiterated on the call that Q2 is the target, hopefully we see that come through. And when these factories get up and running, this is going to help with margins, because right now we have a number of factories that are just running well below capacity.
Yeah.
And so that's not good. It's not good for margins, and it's not good for the customer, because your product isn't in as many places as it could be. You know, so everything depends on production. That's basically the main takeaway from this call, is that they need to get production up and running.
Yeah.
To whatever their max capacity is, and their target for this year is 900 million liters. Um, Now, Christian also guided that 60% of that is going to come from the second half of the year,
Yeah.
which makes sense because again, Ogden is targeted for full ramp by the end of Q2. So really, the benefits of that are going to start to come through in Q3 and Q4. Same thing with their Singapore factory. Again, that's been another you know casualty of this zero COVID policy and everything that comes with it. Same thing with Manshan. So really, by the end of the year is really when we want to start to see the effects of all of this self-manufacturing start to show. So Oatly really needs to stick to the schedule. Otherwise, the stock will get punished, right?
Yeah.
It needs to stick to this and be like, okay, we did what we promised we would do. We're up and running with all three of these factories by Q4, and Q4 gross margin should be north of 20%. If it's still in the teens, again, the stock is going to take quite a while to recover, I think.
Yeah. So
Um, yeah.
so after all this, what would you say today? I mean, this is not financial advice, but is it a buy?
So it's a buy if you believe in the long-term trajectory. Dairy milk sales are vulnerable, in my view. We consume dairy out of tradition, not out of need. And the global dairy market is, by some estimates, north of $270 billion.
Yeah.
And I'm talking about just milk sales, not total dairy products. So this is a market that's ripe for disruption, and dairy milk is, see, with ice creams and yogurts, those products a little bit harder to disrupt, especially for people who are not lactose intolerant, because some it's harder to get the exact taste and texture of dairy ice cream from oat based ice cream. So some people may not really leave dairy ice cream per se. Same thing with yogurt, but dairy milk itself really doesn't need to be consumed, because people don't really care for dairy. I mean, it's not that much better than Oatly's oat milk, right? So I like to look at the total addressable market in terms of how much global dairy milk sales in liquid form, and that's north of 270 billion. And in the U.S. alone, that's about 12 billion, and that number has come down. It used to be 16 billion just about 5 or 6 years ago. That number is down to 12 billion in
Well,
total dairy sales as of 2019, and that number is going to continue to drop as plant-based milks continue to gain market share. And oat milk is the number one sort of contributor to the plant-based milk market growth. And within oat milk, Oatly is the number one market share leader in many countries, and I think soon to be in the US as well. So everything depends on production. That's the key for Oatly. Oatly has the brand, it has the appeal, it has the taste, and they are laying the groundwork for being the global leader in production and efficiency. With their long-term gross margins targeted to be at 40% and adjusted EBITDA margins at 20%, this is very easily a $3 billion revenue company by 2025, in my view. And if you think that they can get to 20% adjusted EBITDA margins, that's $600 million in adjusted EBITDA.
Yeah.
And if they can trade at even 15 times that, right, that's, a 9 billion market cap
Yeah.
versus today's market cap of basically 2 billion.
Yeah. So four
So
four
that represents
a 4x at least.
yeah,
Yeah.
that represents great upside if you think that they can hit these targets.
Yeah.
I think the ball is in Oatly's court. Even with inflation, the key is production. If they can get this production, hump and get these factories up and running, even if they have to deal with high inflation, I think revenues will come in quite strong because they are in control of their own destiny. If they can hit their self-manufacturing targets, things that they can control,
Yeah.
not things that are outside of their control, but things within their control. If they can get to that 50 to 60% self-manufacturing target, maybe they don't get to 40% gross margins just because of inflation, but maybe they could get to 25 to 30% gross margins on a base of $3 billion in revenue. That's substantial in my view. So the long-term targets are very, very encouraging. Sales velocity is super encouraging. People love the taste and texture of Oatly. I love it, in chai. I've been saying this over and over again.
Yeah.
I've tried many different oat milks, and Oatly does the best with chai.
Yeah.
So, the ball is in Oatly's court. They've talked about production for many quarters now, and it's high time that they follow through on that.
Yeah.
And if they follow through on their own promises of production, the stock will follow.
Yep. If like Warren Buffett says, if a stock performs well or a company performs well, the stock will follow sooner or later.
Exactly. Yeah.
So, all right, guys, we'll leave it at that. Thank you for joining us today. And don't forget, guys, to like the video, subscribe if you're not part of it. And if you want to hook up with us, talk with us in our free Discord channel, take a look down in the description. All right, guys, thank you for today. Thank you, Mayur. See you soon.
See you guys.